Hello everybody and welcome to my fall 2024 YouTube video. We've reached an important time in the career life cycle of a financial advisor because within just a few more weeks, I will get to stop answering questions about the election, at least for another 18 months or so until the midterm elections come around again. Now, many of you have already asked me the election question, and you've heard me say that who goes into the White House doesn't matter nearly as much to the market performance as most people think. What I haven't told you, but what I wanted you to hear from me now is this. By the time you watch this video, the election will be about to happen or it will be over. The market will have or had a modest move for a day or two, and then it's over. It's in the rearview mirror. All the uncertainty will be removed from the whole issue. What is already certain, though, is that about half of you are going to be disappointed by the outcome. Now, please listen to me carefully. The market does not care what you think about our new president. In addition, hating the president is not an investment strategy. Do you realize that according to Gallup, since 1961, the stock market has had its best performance when the president's approval ratings were between 35 and 50%? Go ahead and rewind the video and watch that again if you need to. How can that be, you might ask? Well, it's because number one, the new president isn't going to be able to, or often won't even try to enact many of the policies referenced in the campaign. And number two, so many things matter to the market besides who is president. Let's talk about some current examples of other things that matter. And I'll throw out a couple of potential negative examples to start with. First, surveys show that stimulus checks that were sent out during the pandemic have all been spent. That sugar high helped the economy for a while, but now some fear that economic growth will slow significantly from here. Here's another potential negative. Corporate valuations are very elevated right now. What does that mean in non-financial jargon? It means stocks look expensive compared to how they look on average. So how much more expensive can they get? How about a positive example? Inflation has been tamed, the unemployment rate is low, economic growth is solid, and corporate earnings are rising. The economy doesn't get much more Goldilocks than that. Here's another positive. The Fed has started cutting interest rates, and when they do that, if the U.S. is not in or about to go into a recession, the market almost always thrives. So there's just 4 examples of things that may be more significant to the market than who gives the State of the Union address. But there are many more examples than this. Now, if I can just go on a brief tangent on this point so that we can really take a big picture view on things and I can express to you why we invest as we do. Let me say this. In the long run, only one thing determines market performance. Only one thing. Corporate profits. And the nature of capitalism is such that most, not all, but most companies tend to make more and more money over time. And therefore, when you own stock in these companies directly, or when you own them indirectly through many of our portfolios, mutual funds, ETFs are the kinds of things that we use, then those companies, as they make more and more money, the ownership stake becomes more valuable. And that is why the stock market rises over time. In the short run, a million things affect the market on a daily basis. I've mentioned a handful already, but we could also add things like, what are tax rates? Are we at war? Is the national debt high or low? And on and on and on. These millions of issues then affect investors' expectations about what corporate profits might be in the future. So to summarize, day to day, a million things matter. Who is president is one of those. In the long run, corporate profits trump everything else. Pun intended. So as thrilled or as exasperated regarding the election as you might be, this is not a call to action regarding your portfolio. This is not a time to be liquidating your funds to buy shotgun shells and canned food. It's not a time to start getting money from loan sharks so you can invest extra money that isn't even yours. It is a time when a million things matter in the short run, just as they always do, and only one of those includes who's heading to 1600 Pennsylvania Avenue. And that concludes our economic lesson for today. So, if I don't talk to you, happy holidays.